This next problem, the transactions and events are all familiar. We have marked journal entries for all these situations. This scenario then is to recap or reinforce our understanding and is basically for our practice. Romi Limited has acquired the business at book values.
There is no hidden goodwill. There is no capital profit either. The first entry records the acquisition of the business. Assets taken over are debited. Liabilities assumed by the company are credited. The balancing figure is the obligation of the company, that is, the purchase consideration agreed upon. The second entry records the issue of debentures in discharge of this consideration. The issue itself is at a premium of 25%. The number of debentures to be issued is calculated in the working note as 14,400. Vendor is debited to extinguish his debt. Debenture account is credited with the face value of the debentures issued as per the work note. The balancing figure, being the premium, is accounted in the securities premium reserve account.